Welcome back for another video. Today we're going to be talking about another key aspect of the Better Business Bank, and that involves arbitrage. Arbitrage is a very lucrative financial strategy that involves buying and selling the same or similar asset in different markets to profit from the price differences. Okay, now we're going to see what that does in real action, because in a day and time like right now, with inflation being what it is, we need to learn financial strategies that allow us to use other people's money or even using our same dollar multiple times. Okay, so that's what we're going to cover right now in the situation of purchasing a vehicle. How can you purchase a vehicle without losing your money? Well, let's get to it. All right. Let's take a look at arbitrage to make sure everything makes sense. And for context clues, let's say you just had $100. You take that $100 and you go put it into a bank. The bank says, hey, now I know this is unrealistically, but in this illustration, we're going to say that the bank says, or they're willing to give you 3% just to hold your $100. Okay. Now, in turn, let's say someone else needs some money from the bank. So the bank takes that $100 and they give it to someone else, and they charge them 9%. Okay? What is the difference between 3% and 9%? 6%. All right? So this is the agreement. Now, when it comes time, when you really look at it, you say, well, let's put a dollar amount to that. So 3% of $100 is what? It's $3, right? So the bank is being charged $3 to hold your $100, and in turn they reloan that money out at 9%, which gives them how much? $9. So 6% equals how much? $6. So how much money did the bank really make in this transaction? The bank is being charged $3 from you, and then the bank turn around and charge $9 from the person borrowing the money from them, and then they get to keep $6. How much is that? 200%. How is that 200%? Well, think about it. The bank never had any money to begin with. They used your $3 and made twice as much back than you did. If the original amount was $3, which would be 100%, and they made $6, they made 200% using your money in a strategy called arbitrage. How you feel about arbitrage now? I thought you would like that. So let's continue to move on. All right. Now, let's apply that financial strategy to some real life actions that we all partake in. How would you like to buy a new car and keep the money working for you? Have you ever heard of anything like that? Have you even thought of that being possible, to buy a car without using your own money or without losing your money? Well, with traditional financing, if you do it the wrong way, buying that new car could significantly hurt your ability to compound wealth. If you have your money tied up in car payments, you don't have the liquidity to take that cash flow and to actually put it in something that can give you a return on your investment. Okay, so missing that opportunity is what we call the lost opportunity cost. And this is what happens when we don't understand the financial strategies that keeps us ahead of the game to accumulate that wealth. You see, when we go into these dealerships, they bring out these vehicles, or they show us these vehicles, and they have the nice, fresh smell, it's brand new. Everybody likes something new, okay? So it's an emotional event. Well, while you're getting caught up in this physical or what you can actually see, this tangible product, what you don't really understand is the financial strategy that's going on behind the scenes. Okay, so when we go in there, they offer you something like 72 months financing. Make it sound good. What's that, 6 years? And then they'll come back and hit you with the 0% APR financing, right? Oh, they're going to make it sound real good for you, right? And then they can say they can finance this amount at $51,000. Well, if you're a well-informed consumer, hopefully you went to your personal bank first and got approved for a loan before you go to that dealership. Why? Because that dealership will mess around and shoot your credit report to a bunch of different lenders, and that will affect your credit score dramatically. But if you go to your own private bank, preferably a credit union, you're more likely to get an easier approval and a better interest rate on your overall cost for the vehicle. But outside of all of that, this is the traditional setup, and we're going to use this as an example. Okay, so you go to that dealership plan, and we're going to compare this with the Better Business Bank, which is going to have our strategy of arbitrage within it. All right, so we have that $51,000 as the finance amount. That breaks down to about $708 monthly. Okay, that's what you're going to be paying monthly for the next 72 months under the normal circumstances of financing a vehicle. Okay, so after about, let's say that 6 years that you made all those payments, we understand these vehicles to be a depreciating asset. Assets feed you and liabilities bleed you. So it's important to understand the two differences. If it's not paying you, it's not an asset. If you're paying on it, it's a liability for you and it's an asset for somebody else. Okay, so in 6 years of making that $708 payment, the estimated appraisal value of a vehicle could be about $20,000. Okay, but you're still making them payments, or you was making those payments at the $51,000 value price. Okay, now that will be the same thing with the Better Business Bank. You finance $51,000, you still have a $708 monthly payment. And after 6 years of making those payments, the vehicle will still only have a $20,000 value. Now, understanding the right financial strategies can change the tables. Because right now, after spending that for 6 years, you don't have no money left in that account. Or it went towards that vehicle. And at the end of the day, you just have what? $20,000 value vehicle, but you've already spent how much? $51,000 over 6 years. Now with the Better Business Bank, you actually have what you see, $51,000 cash value or cash in that account. How? Why? Because that 708 that you was paying was going to your bank and not somebody else's bank, because you knew the financial strategy of arbitrage. So now you have an actual total value of that vehicle is what? $71,750. Why? Because you didn't use your own money. You used someone else's money to purchase that car because you tapped in and you got you a Better Business Bank. Now, I want to teach you how to break the cycle of going into debt to buy these nice things. But first, you have to tap in. So if this is something you will be interested in, you can go ahead, tap the link, or scan the QR code. Whichever is convenient for you, go ahead and get on that schedule, and we'll get you taken care of. Peace and prosperity.